Welcome to Beyond the Press Release, a production of Gore column in which we take the time to speak with small cap executives after they put out important news. With us today, do I got to introduce him? He's on the screen. Excited to have him back. Excited to have him back on the first interview for the company for 2022 to discuss what's going to be happening. Steve McAuley, CEO Empower Clinics CBDT in Canada, EPWCF in the US, and for our friends in Frankfurt, in Europe on Frankfurt under 8EC. For those new to the story, and that's not going to be, most of you are going to be the OG stalwarts, but man, we keep bringing shareholders onto this company. From a nominal point of view, it just keeps growing rapidly. So what you need to know is Empower is an integrated healthcare company that provides body and mind wellness for patients through its clinics, digital and telemedicine care, and world-class diagnostic laboratories. More than just lip service, the company now is in the middle of expanding its nationwide clinics under the Medi Collective brand. Operational, now 7 versus 5 when we spoke in December. In development construction is now 5. In acquisition, we're going to talk about those as 8. And a lot of openings are scheduled for January 2022 here and the next quarter, let alone the entire year. We're going to talk about that. What does that all equate to? 9-month revenue was $3.22 million, up 1,349%. So the company is executing. Let's talk about what's happened in the last 2 business days. Steve, welcome back, my friend.
Hey, George, Happy New Year to you and family. And as always, a pleasure to be on the show and get a chance to communicate with you and our shareholder base. We are more than excited about 2022. We've been working hard throughout the holidays, as you probably can see by some of the recent press releases. And we've got a lot kind of up our sleeve for even to kick off this month of January and the first quarter. So really looking forward to having a good conversation about it all.
Well, Happy New Year to you, the family, the entire Empower team. And yeah, you're right. The last 2 business days are the days that most people expect to be a little bit chill. Today was the first day of 2022. December 31st was New Year's Eve. And there you are putting out 2 press releases in 2 business days. So there is no rest for the Empower team. So let's kind of go through that, because what I want to do is not just talk about the press releases themselves, but also talk about what that means as far as the 2022 growth plan. All right.
Sure.
And so I'm going to kind of go in reverse chronological. Empower Clinics opens its first Medi Collective in London with co-located Guardian Pharmacy. I love that. And more openings in short order. Let's talk about the status, Steve, of Etobicoke, the 8 via the 2 acquisitions, and how that's looking for the first quarter. Because I think we're going to have you back in Ontario. You couldn't come.
Yeah. I mean, we really just felt that, given the situation going on with the province of Ontario and even the province of British Columbia, where I am, over the holidays, it was really prudent to stay put and stay, kind of within our own bubble. But, the team, have been working tirelessly. I mean, all of the team led by Drs. Jordan and Dr. Aviv, and we're able to get the London, Ontario location opened up. The phones are open. The doctors, I believe, are starting this week accepting patients. And, it's a great location. It's a big location, and really will be wonderful for that community. And then co-locating, bringing the Guardian Pharmacy in as a really nice add-on for our patient base in that community, and also just for the the business model for us in terms of controlling our costs in the location. Etobicoke Lakeshore got delayed. Really, it's just down to COVID supply chain issues. There was a couple pieces of equipment that just couldn't get in there on time, and so we pushed it back a couple of weeks. I'll be meeting with the guys this week to get a firm date, but we think it's sometime not this week, but sometime next week, as far as I know. But we certainly will announce that when we've got it firmed up, and that's going to be such a great location. I mean, I've seen images. If there's anybody who's in the Etobicoke area, just take a drive by on Lakeshore there, and you'll see all the signage. It's just a beautiful looking facility, and I can't wait to see it in person and tour everybody around.
Yeah,
But
I'm sure shareholders are already doing that right now, taking video, posting pics, posting videos. So
oh yeah,
if they aren't, do it for all you guys around Etobicoke.
we know there's a lot of energy around these openings, and I'm thrilled that we have such a following in these communities. And I think it's a demonstration of, not only are people excited about what we're doing in terms of delivering or executing on our business model, but when these business units are really postcode driven, they're community driven, and when we align so closely with our pharmacy partners, it's just a great opportunity to serve that local community and the patients in that community. So that gives us a lot of I guess pride in what we're doing, and we're building something, or we're investing in something that's going to bring long-term benefit to a community, but long-term benefit to our company and our shareholders as well. Now, you did mention acquisitions. So we, with the acquisition partners or the sellers, we'd agreed to roll this into the new year. They wanted to make sure it was the most tax advantageous for them as possible, and frankly, it was better for us with everything that was going on, and it would have overly complicated our audit unnecessarally.
We don't want to do that again. That's for sure.
We don't want to do that again. So we are in real good shape with them. You're on to the final stages of due diligence for each of the groups, and then definitive agreements, and then closing. So more to come on that now that we're kind of back in business.
Are you able to give us a ballpark? I know you can't give us a definitive date, but ballpark, we're looking at sometime in January or next few weeks in mid-February?
Yeah, no, I mean, my current sense is that it's in January, and it's really, not everything's in our control, because, we've got the other parties that we have to deal with and negotiate all the final terms and conditions. But both groups are excited. You remain really optimistic about being part of, the Medi Collective and part of the Empower sort of umbrella. And I think we're going to see them really provide great leadership, medical expertise, and give us, large footprint in those particular markets, and a huge patient roster. It's really phenomenal between the two groups. And we know with our key
600,000,
KPIs,
600,000 for those who don't know, the combined is about 600,000 new patients.
Yeah, 600,000 patients in a roster in two separate large communities is phenomenal. And that's just for us, in terms of accelerating our model, we always look at how quickly are we growing patient roster overall? How quickly are we growing medical doctor base and practitioner base? And we're going to turn around here early in 2022, and the Medi Collective is going to have over 200 staffers, just based on organic openings plus the two acquisitions. So we're sort of really becoming a going concern.
It's really started to become in the early stages, but you can see the behemoth starting to come. Because what I like about as a shareholder, and hopefully that's what people are thinking as they're watching or listening to this, is that after you open Etobicoke, that'll be 8 operational. And then with these 2 acquisitions, fingers crossed, don't have any reason to believe they're not going to close. Once they close, whether it's 30, 45 days, doesn't matter. We jump from 8 to 16.
Yeah.
I mean, now that's a major number, right? What does that do for the weight of the Medi Collective and what you're doing on the clinic side?
Yeah, and that's we've talked about it really all of 2021, that as we get through these openings, the partnerships with the large pharmacy groups and the independents, the acquisitions that we've been able to line up, it creates instant, accretive, stable, long-term revenue run rate for us. So if I take back of napkin right now for 2022, and you start stacking up, 16 active locations, all of a sudden, this is a pretty dramatically different looking company just from the revenue stream. And right now we're only talking about the Medi Collective. We're not talking about Medisure, we're not talking about Kai and everything else that's going on. So
one part of the company. Yeah,
when you start to stack these things on top of each other, this becomes really interesting. And so all the hard work, some of the restructuring we've been doing in 2022, some of the shift in our narrative is all about what we're starting to feel now. Greatly accelerated revenue, greatly accelerated cash flow, and big access to growth markets in the future.
And this is the acceleration phase, because I have to imagine, Steve, that going through this process of opening clinics is like driving a rig, right? First gear, when you're driving a big 18-wheeler rig, you're laboring along. I mean, you're putting in all the effort, you're flooring it, and you're revving, but it's moving very slowly. Yeah. But now it feels like we're in second, third gear and really starting to catch momentum. And on top of that, what I really like is how you're leveraging the clinics, not just to do the original plan, but you've also got Medix teledermatology.
Sure.
Which, by the way, and obviously I have some bias because Medix is a client, but as a result of what's happened with COVID, the backlog to see a dermatologist is now 2 years.
Yeah.
Talk to me about how just that alone could be a great revenue center and a great driver of patients into the Medic Collective, just because I can get my teenage son looked at right now with a scope rather than have to wait, God forbid, a year or 2 years.
Yeah. I mean, we really like the model that we're putting together. So, if you look at it as we've got medical doctors providing primary care services, we link that in with bringing in specialty paramedical services. And then we have this carve out in our footprint for specialty. And we've got the pilot that's commenced with Medix Health on teledermatology. We really like cardiology. We really like nephrology. As this building of a hub and spoke model is what we're going to talk about more and more and more as a theme, with the hubs being the specialty service like a teledermatology or a cardiology center or whatever it might be, and the spokes are all of those TMC locations, wherever they may be. And we use technology, and we use telemedicine, and we use the latest medical device products like the teledermatology scanner, or Holter devices for cardiology, or EKGs and ECGs. So there's so many ways that we begin to leverage these TMC locations. It's never been
let's not forget about the Kai's specimen collection.
Oh, I mean,
diabetic management. It's almost like you're creating the Gillette, even though I'm saying tongue in cheek, the razor blade model. It's kind of like you're building these clinics, but you just have all these different services inside that you can just provide over and over and over again to families. Yeah,
I mean, we again always, it's honestly, you take the back of the napkin, and if you're trying to pencil together a business model that's going to be accretive, and you have divisions that do different things, but then if you take a step back in what we're doing, and you take a snapshot and you go, oh, well, I've got medical centers on one side, I've got R&D and scientists through Kai Medical on the other side for product development. We've got a medical device company now, and absolutely all of those cross-populate and help each other. And we have this baseline always of our pharmacy partners and how we're leveraging the partnerships on the Medi Collective, on Kai Medical and its products, and on the medical device companies. And it's just a nice formula for long-term repeatable revenues and cash flows that I think, we're going to be a growth engine for, a long while to come. But
I see 5 years of runway. I don't see how you don't.
Yeah. I mean, there's,
and only then, because you can't see beyond 5 years, but I just don't see how you stop growing for the next 5 years on all those fronts.
No, because we're building a basis upon which to scale. And, if you rewind, a year ago, 2 years ago, 3 years ago, we're so fundamentally different that, in fact, I'll give you an anecdote. This is very funny. So today is January 4th. I took over this company on January 4th, 3 years ago.
Happy anniversary.
So happy anniversary for all of us and our shareholders. Again, it's a fundamentally different business platform than we were before, but we've got a really scalable formula that is starting to really prove itself out, and it will now materialize in such a significant manner through the financial statements because of all the work and the investment that we've put in, not only in money, but in time and in people and leadership at all levels.
By the way, I got to tell people, and I know we've got a lot of OG investors on here that have been around for a year and a half or 2 years, but not very many people have been here for 3 from the time you took over. Yeah. And guys, I'm going to tell you, just as not because I don't need I don't have to, we have great interviews, so I don't have to say anything great. But what I'm blown away by is what you've done in 3 years when you inherited a disaster, a mess. We're not going to talk about it. That's well in the past. But what that signals to me is, for everybody at home, is Steve and the entire team were able to take that disaster of a mess 3 years ago they inherited, put it in this position today, scraping, scratching, all. You just have to extrapolate the next 3 years. You've got resources, you've got brand, you've got products, you've got clinics rolling out, you're going to have cash flow rolling in. Financing is readily available to you whenever you need it. If you extrapolate where the company was 3 years ago and do that again by that magnitude, we have an unbelievable story in the next 3 years.
Yeah, thank you for that. And we all agree. And I count myself fortunate to continue to be surrounded by just incredible team members and staffers across all divisions, leadership, middle management, hourly workers, whatever the case may be. And, it's a motivated crew who have belief in the work that they're doing within their division, but they also have belief in the overall public company vision, our healthcare model that we're delivering. They enjoy the segment that we're in. Everybody consistently, to a person, believes we're in the right segment, serving the markets that we serve, always recognizing that we have so much opportunity to grow even beyond where we are right now. And so our theme at all levels continues to be execution and culture.
It's happening.
And it, what, it is happening, George. That's the
you're not just talking the walk, you're walking.
Yeah. So one thing that, no matter what's happening out there in markets or sentiment, I can attest to how hard everybody is working, and always looking to work smarter along the way. So find productivity, find efficiencies, find ways to leverage each other's strengths in our organizational development. And we still have gaps. We're a developing company. But if you looked at where we were a year ago, and I said, how many gaps have we filled in 12 months? Well, it's pretty darn phenomenal. And
gaps come, let me tell you something. I had a really big conversation with somebody yesterday who services enterprise level clients. And I was shocked at the gaps that they still have. You just presume that the biggest companies in the world have all the resources, they have all the money. They got gaps. So sure. That actually made me feel better as a GORCOM, because I always feel like, how come I can't close every gap? So if you've got some, Steve, that's fine. Just the fact that that they're there is what's important.
You're totally right. And it's really just about attitude, and also, prioritizing and working within your means, right? I mean, we all have budgets to work with. We don't have endless capital. So we have to always, keep that in mind. But, I think, overall, looking back, I think, we've done a pretty nice job over the year. And again, I think, we've got a stage set, for 2022. And I hope that everybody, just based on how the recent run of announcements have come, you can see how this momentum is really, it's pretty palpable right now. It's very tangible.
Last question on the clinic side. Last we spoke, you had about, in addition to the 8 that are going to be operational any day now, the 8 that are going to come in, that's 16, 5 that are in development. So I'll take you to 21. They're also, you had a pipeline, about 21 in the pipeline.
Yeah.
Are you able to tell us how that pipeline is looking? But more importantly, how's 2022 look for the clinic side in terms of, do you foresee any letdown, any gaps in development where you might have to slow down, or is it just now full force ahead in Canada? And then let's touch a little bit on the US and your plans there.
So the components of the pipeline, active acquisitions, in negotiation or lease negotiation or pre-construction, and then just the pipeline of other targets around the country, it is all still right on. It's all valid. The pipeline for us just continues to get larger as the MediCollective brand and Empower continue to increase its national visibility. We get many more inbound requests from all over the country, from far East Coast to far West Coast in British Columbia and everything in between, we've got opportunities. So we'll be meeting again with the doctors, Jordan and Dr. Aviv this week, in fact. It's actually on the calendar, I believe, Thursday, which is a pipeline review. I'd asked them in December, and particularly late December, stay laser focused on getting the TMC locations opened and operational that we had in our pipeline. Any acquisition conversations, roll them over to the new year, because we can't have anybody distracted. It's tough out there with construction. It's tough out there with building permits. It's all the COVID related supply chain issues, both supplies and people are real. And so the fact that they can even get these locations up and running in such a tough operational climate is quite a testament in my mind.
I got to tell you, I was thinking the same thing when I was saying, man, you guys are not slowing down in terms of people, because you could have easily have told the market, hey guys, we got 4 locations ready to open. We just can't find people. And that's because of everyone's having trouble finding people. Yeah. And yet, knock on wood, you haven't run into that problem yet. But man, even if your pipeline stays at 21, and I'm presuming it's going to grow throughout 2022, you're talking about 42 locations. Yeah,
it's pretty significant.
At full crank, back of the napkin math, I won't do it, but everyone at home should be doing that back of the napkin. That's a pretty big number.
Yeah, it is. It really is. And, but we've been fortunate to be able to have the, cash and capital runway to invest, in the MediCollective brand and these initiatives with our pharmacy partners, whatever they may be, and get this, get this brand really, heating up and going. And, everybody always likes things to go faster. I think, again, as I look back, given the operating climate, I think the team have done a very commendable job in working through tough times, even to get the openings done that we did. And when you look at locations like London, Ontario, and you look at Etobicoke Lakeshore and see how significant they are and how beautiful they are and how well equipped they are, and the quality of staff and medical doctors to staffers and support people, it's really, again, I'm very proud of the team of what they've accomplished so far, but they're highly motivated to continue to deliver now further in 2022.
And by the way, you didn't mention it, so I do want to bring that in before we hop onto Medisure. Some investors have been asking, how's the balance sheet look? How's the cash position look? Do you have access to cash if you need it without being too dilutive? I mean, you always get some dilution, that it is the way it is, but if you can, how's the company's balance sheet or prospective balance sheet looking?
Yeah, no, we're in good shape. And, one of the things that I've really started working hard on, really going back even more than 18 months ago, even when, we were languishing at, 3 or 4 cents a share, was daily liquidity. And, a lot of times you see companies that for whatever reason just can't figure out liquidity. And in the absence of liquidity, you're just not going to have sustained share price movement. And so that's something that we've been able to maintain through 2020, 2021. And, our daily liquidity is still very strong. And so what that means is access to capital is much easier when needed, when you've got strong daily liquidity. So, we certainly feel bullish on our ability to, continue to, have a balance sheet that's, sustainable for us. And then the other thing that you have to keep in mind, we've got outbound, investment right now, and, CapEx for the clinics, getting people on board, then we get into the billing cycle, and we've got, cash coming back in, so there's a little bit of cash out time, but it doesn't take very long for the cash now to start to reverse itself and start to come back into us. And in some cases, we've also got tenants improvement allowances, subsidies from pharmacy partners, where that actually generates an inflow of cash while we're doing the development. So, we're looking at ways to always reduce our costs, control our cash flow, the cash out. But it's inevitable. You have to invest in order to get to a position where you can have cash come back in and get the return.
I'll tell you why I haven't asked it in the past, and a couple people have said, "Hey, how come George didn't ask it?" Is because when you started talking about U.S. expansion for the clinics, sometime in November, I think, when you think you've talked about it a couple of times.
Yeah.
I said, it was automatic for me. I was saying, okay, Steve isn't going to talk about expand to the US unless he knows you got access to capital, because you can't just boil the ocean.
No,
right.
it's too big.
So is this the year that the US, you mentioned strongly a couple of times, you still confident that whatever's happening in Canada is off and running on its own, but the US is still?
Yeah, we absolutely are committed to turning our attention to the US. There's just so much opportunity in healthcare there. There's so much opportunity with our other divisions. You know, we want to see Medisure and its products seek FDA approval. We've brought, Kai Care products to Canada. Again, we see this as a North American wide play at this point in time, because there's so much opportunity for growth. You've got still a very fragmented market. The US healthcare market is complex, diverse, enormous, and it's a strong sector and will remain a strong sector, especially given the tremendous investment by the current administration in the US for healthcare and the health and well-being of all of its citizens.
And it'd be easy for any other CEO, George of GeorgeCom Widgets. The US is a big market and we want to go after it. But the fact of the matter is, your pedigree, Steve, is you don't know how to play small ball. I mean, you had to play small ball for a couple of years and inheriting what you inherited, get it to this stage. But, your pedigree, for people who don't know you, or maybe don't know you as well as a lot of shareholders do, is you only play for the big game.
Oh yeah, we have to, and I think our long-term shareholder value improves by leveraging our capability to work both in the United States and in Canada. You got to remember the history of this company. It started with U.S. clinic assets, and we've got a very important division in Kai Medical out of Dallas, Texas. We're by no means losing sight of the U.S. markets. We had to focus on the investment we made in launching the MediCollective brand in Canada, but it is always intended to be a North America-wide brand, the MediCollective itself, and whatever derivatives of the MediCollective that we decide to create or expand into.
Let's talk about Medisure. And the quote from the press release today that says, Medisure has made, this is your quote, has made immense progress since joining Empower. Through the capacity and leadership of our team, they've been able to double down on their sales, increase their research and development, and most importantly, expand their ability to provide affordable and quality health management solutions. That tells me that, not tells me, but that just reinforces what you said from the beginning. You weren't just buying Medisure for the nice, compact little company it was with some nice revenue number. You had always told shareholders that you were buying it to leverage its distribution and its licensing and it's all that. And today we see that you got licenses for 2 new best-in-class products, blood glucose and vitamin D rapid test. And 10 days ago, whatever it was, I tried to take the holidays, you wouldn't let us take any time off, submitted for the rapid antigen health Canada test. Yeah. So are we seeing that come to fruition now? Are you confident now, and shareholders now have the anecdotal evidence that in fact you're looking to really blow out Medisure now way beyond what it was into its full capabilities? Yeah,
with Medisure, I was always confident in their ability to expand, reshape themselves. Right from the beginning, when we were going through due diligence, we were looking at the company, what its strengths were, what its development requirements were, what its capital requirements might be. It was exciting for me to say to ourselves inside that they've got something here. They had a 0.5 market share in blood, in BGMs, blood glucose monitoring systems, which is a negligible, market share in Canada. So you've got nothing but kind of upside and opportunity within that segment. But as you get to know Mario Cortes and his team and the way they think and the way they operate, and really deep inside their incredible technical capability with the regulatory requirements of a medical device company, They had something that we did not have in Canada, and I knew we needed it in Canada. If we wanted to bring Kai Care products to Canada or other types of test products to Canada, you've got to be an expert in how to navigate and operate the Health Canada environment. They also had warehousing. They also have packaging and distribution capability, 3PL capabilities. So all of a sudden, we kind of get a turnkey distribution center for Canada by virtue of this acquisition. So the diversification plan was there from the beginning. What we're seeing—
And now we're seeing it.
Yeah, what we're seeing is Mario and his team demonstrate how darn good they actually are. The potential that was inside them when they have greater access to capital and a little bit of freedom and a bit more encouragement to say, you know, go for it. Like, we'll support your cash flow, but go for it. And lo and behold, they turn around and their fourth quarter numbers were just outstanding. As we had budgets established, and these guys are tremendously focused on KPIs and budgets, really, you know, best in class. And, you know, they were just beating those month in, month out. And so with these announcements that came, I actually was not anticipating these to be delivered until the first quarter. And, you know, Mario called me and really, you know, surprised us by getting this done faster than we even anticipated. So having not only securing the distribution rights, manufacturing of the rapid antigen tests, and all the packaging design is already done, that the full Health Canada submission is in. And getting it done before the holidays was a really big accomplishment. It really just speeds up the whole process.
And your team, as great as they are, could never have done that without having the Medisure expertise, right?
No, not at all. Not at all. What we've done in Canada after Medisure acquisition closed is we began to integrate with them, and we transitioned all of our Health Canada work to the Medisure team on behalf of all divisions. And we've actually changed our addresses of record related to that. So the Health Canada records for all of our divisions in Canada is the Ajax location in Ontario. And they've got team members who are just absolute Health Canada experts. Now, moving to the new products. So we'd always planned with Mario and team to invest in new and improved diabetes-based products. So what that means is we have the new Medisure Empower blood glucose monitor that's state-of-the-art, Bluetooth enabled, and just a better product. And we expect to get that on the shelves of our pharmacy partners. And they anticipate that's going to be commercialized in toward the end of the first quarter. The other thing that we always knew that we would do is leverage their medical device expertise to diversify their product offerings. It helps de-risk that division for the future, so you're not dependent on one channel. And if they have the capability, then find product sets that they can handle. It shouldn't be often some incredible tangent, but stuff they can really handle. One of the ones that was identified early in the due diligence phase pre-acquisition was this vitamin D test that they could bring to market. So again, in both cases for the BGM and for the new vitamin D test, you need to put it onto an MDL license, so the medical device establishment license, and they have multiple of those licenses. So the BGM is a class 3, the vitamin test is a class 2. They expect the vitamin D test to be commercialized by the end of the first quarter. And I've already been having discussions on the vitamin D test product with all of our pharmacy partners, whether it be—
And I was about to say that's where
yeah.
you supercharge them, because they needed you needed them. It just seems like a perfect fit where you're able to just increase distribution with a phone call.
Well, that's correct, and it literally is a phone call with all these big brands, because we've worked, you know, a year to establish really tight working relationships with the executive and management teams of all of these brands. We know that they want a product like vitamin D tests because they know that their customers in their pharmacies, if they don't know that they're vitamin D deficient, they are not likely to buy their vitamin D products. And the pharmacy partners want to sell more supplements. So our role is to bring the high quality, reasonably priced test products that can be distributed through these channels, these many tens of thousands of pharmacies across the country. And I think it's a great product. The packaging looks tremendous, and then we'll preview that in short order. And again, we hope to have that commercialized.
Empowering is increasingly becoming a trusted name
Correct.
with these big pharmacy brands. And we know what you do with Rexall. The London store was done with Guardian.
Yeah.
So it's your rep is developing with the biggest distribution on multiple levels, on clinics, on medical devices.
Yeah.
It's
that's why at the beginning,
one of the best acquisitions I've ever seen in the small cap space in terms of.
Yeah, thank you. As myself and my team were looking at opportunities, we're always trying to determine, is there increased scalability with that acquisition? Can it be something more than it is right now? And take $2 million in revenue and turn it into $10 million of revenue, turn that into $20 million of revenue, and so on and so forth. And I hope everybody sees that now with these very recent announcements. There is a game plan at work here. There's a methodology at work. There's a method to our madness. And again, hopefully, everybody can see this now really becoming tangible and materializing, and how that translates into fresh revenue and free cash flow in the future, and a much more diversified, de-risked healthcare entity.
Yeah, and a faster healthcare entity, because you have all these built-in components now that allow you to get licensing, distribution, warehousing. I look at this acquisition, and again, not for hyperbole, but I remember when Google bought YouTube, right? And I remember at first I didn't see it. I go, that's just a bunch of videos. And then you start seeing Google's plan really unveil as to why they made that acquisition. And obviously not the same on a scale point of view, but it's amazing now to see that Medisure wasn't acquired just for some nice medical devices and nice revenue. There's a much bigger purpose, and we're seeing it. So that's awesome.
Well, it is. And I hope everybody can sort of read or feel my excitement over the Medisure brand. If people look back on it and maybe we're a little bit sort of, passe on this particular acquisition. Why did we do it? Did we pay too much money? All those sorts of, comments. I hope that everybody now kind of understands that in less than 6 months, where we have taken Medisure, and it's going to be a very interesting brand. And again, this is not just about Canada, because one of the initiatives for the Medisure team is to start seeking FDA approval for their various products also.
Well, and Steve, I want to end off with this, which is you wouldn't be the CEO and getting paid the big bucks if the acquisition you're making were obvious to all of us, right? The idea is leadership, but all kidding aside, tongue in cheek, all kidding aside though, that's the job of great leadership, seeing the opportunity where other people just don't see it, right? And even guys like me sometimes saying, I wonder why they did that. Now I see. So I think it's just a credit to your leadership to be able to see the bigger picture when Medisure was available to a lot of people, right? I'm sure Medisure could have had a lot of suitors if they came knocking, and they probably would have been open and amenable to it, but people just saw Medisure for what it was. You saw Medisure for what it could be and how it could fit into the enterprise.
Well, correct. And then the other thing, along with that, is as we got to know the people at Medisure,
great
leadership at Medisure, the maturity, the business acumen, really what it needed was a little bit of supercharging from us, access to more working capital, a little bit of pushing, from me. Around vision and
Mary really, says you push
and really around motivation, and then frankly get out of their way, because they're so competent and they're so capable, and I really like what they're doing, and I'm looking forward to seeing in thousands of pharmacies and in all our neighborhoods a multitude of Medisure branded products. from diabetes to testing to other products that may come along, because it's a trademark name. It's our IP. It really stands for something, and we just need more consumers and pharmacies to be aware of the brand and really what it stands for.
And last but not least, on that same the breadth there, Kai Labs. When you bought Kai Labs in the fourth quarter of 2020, it came out of the gates flying with some great contracts. Yeah. And then, had, I think we all agree, a bit of didn't live up to expectations for part of 2021, for a big part of 2021. But then you announced near the end of the year, I'm going to remind everybody, Kai Medical Lab secures COVID-19 testing contract for a large game event in Los Angeles to provide
Las Vegas,
I'm sorry, to provide over 6,000 rapid antigen and PCR COVID-19 tests. At the time, there's some people asking, well, is that what they might be able to get to? Is that they're thinking might be the high side of the potential? I know you can't give us specifics, but how did that turn out? And more importantly, how's that an indication of now that Kai is also on the right path after you had to work out some things there?
Yeah, and you're right. We went through a lull. I think a little bit of it was if you recall, we tripled the size of the labs. We invested in that. It was important to do that to be able to really have any kind of long-term sustained growth. So that took some time and distraction away during the summer months. We saw some of the US markets sort of soften as it related to COVID testing. And so I think, Kai was kind of caught up in that also. And I think that, Kai, just could have done more. They could have, performed better than they did. We worked it out. We had a lot of conversations. We made sure that we started hiring additional resources to support some of their gaps. We've got a really great business development person on the ground now, hired and working. And that Las Vegas contract was interesting because I think what it did for them was it really showed Kai themselves that they can do this. They can play in a big stage. That was a bid situation. They were bidding against, I think it was 3 or 4 other outfits for the business, but they won. They put their best foot forward. They demonstrated that they could do it. And when they went there, all hands on deck. Some days they were working, 18 hours a day because the testing was happening morning, kind of noon and night. And they got it done. The final count, I don't know, but it was if it was 6,000 or slightly less, it was pretty darn close. And they also
got there, which is a big revenue, by the way. That's a big piece of revenue at the quarter.
Really, really big piece of revenue, and importantly as well, it was good, high quality, profitable revenue, which is great to see. So again, that's real kind of kudos to Yoshi Tyler and her team, because I know behind the scenes how hard they were working on it. I had visibility to it for sign off, and I just think that. I'm so proud of that work that they did, but more importantly, I think they demonstrated for themselves that they deserve to be in these big contracts. And when I look at their pipeline now, I can see that the pipeline is bigger, it's deeper, it's bigger names, and they're at the table on these transactions. And I fully anticipate that they'll keep this momentum going.
And you've got someone there to close it, to close those, right? Because that was the one thing that was kind of lacking. I think you thought that the Kai team could close and realize maybe that wasn't their strength. So you brought in people or a team or a person that can, so maybe speak to that.
Yeah, and that's exactly it. I mean, the pure business development sales, I consider them a product and service company first. Their R&D, which I do want to talk about, is outstanding. They've got a great team of molecular scientists. They're very creative. They're really working on some very interesting new products that we'll be updating the market on, in the not too distant future. And these are, US-based, FDA-approved type products that again will de-risk the Kai business model from simply.
And Steve, sorry, we lost you there. Technical glitch. One of my favorite action movies in 1994 was True Lies. with Arnold Schwarzenegger, and the battery died on the terrorist who was filming the terrorist message. So your battery died there for a second. That's okay.
Exactly.
You're on the note about de-risking Kai. Continue with that.
Yeah. So the concept, like we talked about with Medisure, de-risking sort of that singular product focus. Same thing with Kai Medical is, we have to anticipate a time when COVID testing volumes may not be around in the future. We would be remiss if we didn't think that way and plan that way. So Yoshi and her team of scientists have been working very hard on bringing their new types of test products to market. And they have a great pipeline, starting with, blood spot based testing, but think, female health, men's health, disease states that can be direct to consumer tests, at home tests that consumers could order off the kaitest.com website. And again, in partnership with pharmacies, where they can be made available on the shelves of pharmacies in the communities, where people live and work. So same sort of playbook here: diversification, de-risk, other growth channels for, at this stage, the FDA approved markets for Kai Medical. And then we'll see, how that expands beyond the US borders later in the year.
The amazing thing is, if almost any other small cap company just had one of these things happening, either the clinics or Medisure or Kai, which would be more grassroots, but very, very promising. And those would be company makers or potential company makers on their own. And you've got all three under one umbrella. So with that, what's your vision for 2022? And I'm not talking about specific terms of revenues and things like that, but
yeah,
do you have any doubt? You never have had, but you always think 12, 18 months ahead. You're never in today. Where are we a year from now?
A year from now? Oh, goodness me. Well, we've just brought on Jennifer Archibald, our new CFO. She got thrown in the deep end right away, but she's incredibly capable. It's one of those big gaps that we have, and we really had a very disciplined, detailed search process. And Jennifer's just going to be a great teammate for myself and everybody else, and a great, wonderful leader. And so I think having these high quality leaders in place to help support our divisions, mentor our divisions, run our finance organizations is going to be a key differentiator for us to deliver upon the opportunities within all of the divisions, plus enable us to really turn our attention to even bigger M&A opportunities within the divisions, or perhaps even diversification. So more to come on some organizational structural changes to help support that. But end of 2022 is the look back at a year from today. Is we have however many TMC clinics going in Canada, fully operational, and it's always in various rolling stages. But we're going to have a lot of them. I would anticipate TMC is going to be, the brand will be in the US within a year from now. I would anticipate that Medisure is going to be a really interesting company in Canada in 2022. And I would anticipate that we're going to see Medisure products into the US with FDA approvals. I don't know which ones and what categories. And then with Kai, Kai are just going to continue to be a great R&D center, bringing new products to market. We should see them having, a lot of new products available on their website and in distribution partnership with pharmacies. And then on the M&A side, time will tell. I would expect that we have a different ticker symbol this time next year. I can't tell you what that is, but I think that we want to see that change in the future. And the concept of uplisting, I think it's in the cards for us. We don't know what markets are going to look like, throughout the year, but we certainly are doing the groundwork, as we've talked about before, to be ready for the concept of uplisting. And again, going back to Jennifer, she's a key integral piece for the concept of uplisting, because she's been a CFO of a NASDAQ listed company. She knows how to work with New York and to work with across, the US and Canadian markets. So, getting that strategic, role filled by someone who's done it before was really important to me. So, you know,
There was a
it's
reason
pretty
why
exciting.
that was in the headline when she was hired. So I think we're all kind of assuming that's where you want to go.
Yeah, absolutely. Absolutely. I mean, you
Would
know,
I be overstating it if I thought that my personal opinion is that a year from now, Empower's gone through a complete, and I mean, this inflection point just gets blown out the door. And, you know, you're a massive, I don't want to say massive, but you're big juggernaut of revenue, clinics, products, all of it's just accelerating, going back to my 18-wheeler rig,
yeah.
you know, where you're now in upper gears and you're even accelerating faster into a.
Yeah, I think you're right. You know, it really, you know, our goal through this journey is to operate, you know, with high standards, with high expectations of performance across all aspects of the division. You know, personally, high expectations of myself for performance in support of shareholders and the great shareholder base that we have. You know, supporting our efforts in our narrative to support liquidity for, you know, all the obvious reasons. And I think the other thing that's happening with us is, you know, some of the shareholder base from the very beginning has just completely turned over. There's probably been shareholders this year that have turned over, and I think we'll have a whole new crop of shareholders come through the story, because we'll keep telling the story, and we'll keep using, you know, forums like Agoracom to help communicate, you know, broadly, communicate with as much transparency as we can. You know, the more visibility we get, the more careful we have to be with the concepts of guidance and providing guidance. You know, we must continue to be more and more disciplined, so that if we were to uplist to a market like NASDAQ, we've got to look like, feel like, operate like that today before we get there. And that's really kind of the mantra behind the scenes with what we're doing. And that really is reflected in the type of organizational development that is going on as we build our brand and our division's brands and build the culture, you know, of Empower Clinics.
Steve, I, for one, I've been around long enough in this business, 25 years this April, to be able to know pretty good level of, you know, certainty what's real and what's not. And this is as real as it gets. Mm-hmm. And when you talk about acting like a NASDAQ company today, to be on the NASDAQ in the future, we don't know when, but I fully believe that's where Empower is going to be. I think it's going to have the business fundamentals behind it. It's going to be exciting to watch. And I love the fact that you always, given how busy your schedule is, I think this is running close to an hour. But to take the time to be transparent, to really explain to everybody is amazing. I think that's why you have such great success with shareholders. It's not a perfect ride, right? No business, like, you know, people think everything goes like that, but the fact of the matter is, it does this and then gets up to here, but you're getting there. I'm excited for you. And thanks so much for taking up this time.
Yeah, thank you, George. Yeah, I really appreciate your time as well. You know, it's just so important to me to always try to communicate. It's why I try to shoot so many videos. You know, our business model has evolved and it's changed, and people who have been with the journey are, you know, probably getting it. But if you're a new investor or a potential investor who's coming in today as a snapshot in time, you know, you would have no way of knowing kind of what's going on. So it's these types of interview sessions that allow us in this long form to really dive into the business model and explain kind of how we got here, what does it look like today, snapshot in time, but most importantly, where is the journey going? And you know, so we'll keep consistent in these formats, sometimes long format, sometimes short format as appropriate. And you know, again, I wish all of our shareholders and followers a very happy new year, a healthy new year, a successful new year. And I want to continue to thank you for staying with us on the journey, even though some of the days feel like rocky days. We're still building a business here, and it is solid, it is tangible, it is real. And I hope that, you know, everybody will continue to kind of follow the story, share the story with others out there. And again, just a big thank you to all of our supporters.
Likewise, Steve, I think I speak on behalf of everyone when we say Happy New Year to you.
Thank you.
Looking forward to great 2022. And I know you're going to be back on sometime in January. I don't know for a fact, but it just feels like it. Between Etobicoke opening, possibly the acquisitions closing, there seems like just going to be too much going on. But until then, my friend, thank you. Go rest your voice. Go take a bit of a break. Have a great day, and we'll see you next time, my friend.
Thank you.
To everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To Steve McAuley, CEO of Empower Clinics CBDT in Canada, EPWCF in the US, and for our friends in Europe on Frankfurt under AEC. Thanks for joining us. Do your due diligence. Hopefully you discovered your next great small cap healthcare company for all those who are new to the story, but for all the OGs out there, for everyone who's been with us for all this time. Hopefully you're reinvigorated and you see exactly where the company's going and energized and excited to see where the company's going, because I am, and I hope you are too. Have a great day. See you next time.
Hey guys, this video is over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our channel and never missing another great Agoracom small cap video.